Thank you, everyone, for being here today. You probably noticed that Travis is not here. He is currently out of town. He's finishing up his senior year of banking school. So he sends his apologies for not being able to attend. But we'll go ahead and get started. We have not a super full agenda, so we should be able to finish up pretty quickly. But um, first thing on our agenda that we want to do is accept the minutes from the April 2nd meeting. Those were emailed out to you all shortly after the meeting back in April, which, seems like a long time ago now. So what we want to do is I'll go ahead and call for a motion to accept those minutes from the April 2nd meeting.
I'll make the motion, Luke, to approve the minutes.
Do we have a second?
I'll second.
Thank you, Sal. All right, so everybody in favor, please state by saying aye.
Aye.
All right. And all opposed? All right, so hearing none, we will go ahead and move on to the next item on the agenda, which is a presentation by Miss Jennifer Christensen from Carr, Riggs, and Ingram. So Jennifer, you can go ahead and take it away.
All right, thank you. Good morning, everyone. I'm going to go ahead and share my screen with my presentation on here. And so I'm going to just give you a little bit of background on the internal funds audit that we're about to start. And so starting with a little time frame. So we had our initial audit planning meeting with the district on June 11th. And then we went ahead and started working on our audit planning throughout the month of July. And our plan is to be on site at the district office the week of August 19th to do our testing. And then after that, after we're done doing our testing, we go through and we review any preliminary findings we may have with each of the schools. We have an exit conference with each school, the principal and the financial secretary. And so that takes quite a while to get through all of the schools, over 100 of them. And then around mid to late October, we will plan on issuing drafts of the financial statements and the reports that we do for this audit. And then mid to late November is when we're planning on issuing the financial statements. Of course, that could change depending on the audit of the district-wide accounts or the district, but we're ready to issue around that time. So for the audit of the internal funds, our responsibility is we are going to opine on the financial statements and whether they are presented in accordance with generally accepted accounting principles, GAAP. And so how we do that is we do a lot of audit testing. One part is we do procedures on the various financial statement accounts. So we'll do substantive procedures on the cash accounts, on accounts receivable, accounts payable. And so that's one part of our audit. Then part of our planning process, we're going to understand how the internal controls work, what the processes are, the procedures. That includes IT general controls. And a lot of that part has been done already, but we'll continue to do that. We'll do some walkthroughs of the various controls that are in place at the district. And then the kind of third part of our audit is compliance testing. And this ends up being the bulk of our hours are spent on doing compliance testing. And so we're testing with rules and laws that either school board rules. There are rules at the state of Florida. The DOE has a red book where they have rules that pertain to the internal funds. And then the district has an internal funds manual that has a lot of policies and procedures in it that we go through and we test compliance with those rules. And so to kind of take a step back with internal funds so you can understand the compliance part of what we're testing, the internal funds are the funds where the money is basically raised or collected by the students and spent on the students. So it would include field trips, fundraisers, prom tickets, football game tickets. And so so it's a little different than funds that come from the state of Florida. With those, that's a whole different set of compliance rules and regulations. But these are all funds that are raised by the students and then need to be spent on the students in that same year. So we're going through, and as you can imagine, anytime there's a fundraiser, there's forms that have to be filled out and approval that has to be done before a club can have a fundraiser. Afterwards, they have to complete a financial report to see whether the fundraiser was profitable or not. It has to be signed off by the club sponsor. And so those are some of the tests we're looking for, is to make sure those procedures are being followed. As far as the school district's responsibilities, when we look at those charged with governance and management, so that would be include the school board, they're responsible for overseeing our what we call our non-attest services. And in this case, that would be preparing the financial statements. That's a non-attest service that we provide in addition to the audit. And it's really, we do it for convenience. The district could prepare the financial statements and we can audit them, but we just do it as a convenience factor. But management and the school board are responsible for overseeing those services. So what that means is they're going to review the financial statements and the footnotes, make sure they're complete, make sure they're accurate. And so that's part of our standards require that they oversee that service. And then as far as the accounting and finance department, they're going to be our main contacts during the audit. And so they're going to provide all the information we ask for. All of the samples, when I mentioned the compliance testing, there's hundreds and hundreds of samples that we pick that Heather and Alliance team, they pull all the backup for. So when we come out to the district office, it's all ready for us and we go through. And as you can imagine, it's piles of information. Then when we're out there, sometimes there are questions that we have when we're going through the paperwork. So then we give them another list of items that we need pulled, information we need pulled, questions we need answered. And their team does a great job of staying on top of that. We're out there for the week, and every day, by the end of the day, any open items are usually cleared. They've given us what we've asked for, and then we can, start the next day all over with more questions and more information. But they're a big part of our audit, helping it really run smooth, is because they're pulling so much information so timely for us. As far as other information that we're required to communicate to you during this phase would be possible risks that we identified during the planning phase. So our standards require that we look at what risks can exist. It doesn't mean we have found them at the school district or in the internal funds. It's just we do a brainstorming session where we say what risks could be there, what inherent risks are there related to internal funds. And so two of those risks are ones that our standards require that we presume exist in every client and every organization. So one is management override of controls. You can have policies and procedures in place, but if the boss comes and tells you to circumvent them, that's a risk that may happen. And then the second one that's presumed to exist at all organizations would be improper revenue recognition due to fraud. So those are two that we have. And then the third one we have that we identified in the internal funds for Polk County schools would be cash collections outside the front office not being properly safeguarded. So this is just an inherent risk because money is being sometimes collected by teachers, and then it's being forwarded to the front office. And there's just a risk that cash could be, missing, it could be stolen. And so that's something that we look at. And then when we do our audit procedures, they're customized to address these risks. So we do, and that's part of all the compliance testing we do, where we walk through from, what we call cradle to grave, from when the money's first turned in all the way until it gets to the bank. And that's something we do to address that risk. We are what is considered a component auditor. So what that means is we are auditing one fund of the school district, but the school district's, entire AFR will be audited by another auditor. So we have a role where we communicate with them. They communicate certain things to us. And then if we come across anything, we would communicate to them. And then at the end, we coordinate when we issue our audits, and they're really the ones that are going to guide that, and we'll issue our audit when they're ready for us to issue it. And that way, they just want to coincide the dates sometimes, or make sure that they're issued close to each other. So we'll kind of wait until they're close to issuing before we'll issue. If we have any adjustments, if we identify any fraud, we would communicate that to them, as well as communicating it to the school district. And so lastly, normally during these audit committee meetings, I always like to ask some of our standard fraud inquiries. I know, this would be to your knowledge if you're aware as the audit committee, or really, I guess anyone on the call could answer it if they have a yes answer. But if you're aware of any fraud that may have occurred in the internal funds, or any concerns that you may have about, lack of controls, a risk that money could be stolen and not identified, or not mitigated, that risk not mitigated by a policy or procedure, anything like that, fraud or concerns about controls that any of you have? No? Okay. Okay, so as I mentioned, we'll be, we've worked on the planning phase already, and we'll be jumping into the field work phase pretty shortly in August. And that was the end of my presentation. And here's my information. If anybody would like to reach out to me, feel free. And I'm going to stop sharing at this point. Thank you so much for your time this morning.
All right, thank you, Jennifer. While we still have it here, just give a moment. If anybody has any questions for Jennifer, now's the time to ask them. All right, well, hearing none, we will move on to the next item on our agenda, which is a presentation from our partners at Deep Blue Investments. So Dominic and John, you guys can go ahead and get started with your presentation.
Good morning. Thank you very much. For all some of you on here that may not know me, my name is Dominic Crisfaro. I'm Director of Client Advisory Services here at Deep Blue. And joining me today is John Scott, which is our Associate in Investment Advisory, and we're responsible for managing all our advisory relationships across Florida. So what I'd like to do today is I'm going to share my screen here in a second. And here we go. And let me know if you can see the screen. I'm going to try to make it as big as possible so that you can see it in full screen mode. All right, can you see that?
Yes.
All right, so today we're going to basically share with you all the quarterly performance report for the quarter ended June 30, 2020. And so this is the quarterly report that we do. It's also the end of the fiscal year for you all. So to move forward, we'll just go through the agenda here. Basically, we'll talk a little bit about the economy. We'll talk about compliance, and then we'll review the portfolios that we manage for Polk schools. The first thing on our agenda here is our executive summary. This is really a page that we've put together so that the folks at Polk County, if the schools can need to kind of get a quick idea what's going on in the markets, they can see a market overview, as well as take a look at how the portfolios are doing, as well as the strategy that we've been using and that we see for the future. So what I'd like to do is first kind of focus here in the middle. One of the investments that the district has is their short-term investments. This is really all their investment pools that are used to kind of manage the daily liquidity that you need to pay expenses, to pay payroll, and things like that. Those investments, short-term investments, total about $404 million. And for the quarter, those investments earned just over $5.2 million. So short-term investments are doing very well. Additionally, the school district has a long-term portfolio which is made up of a portfolio that we manage on a discretionary basis. That means that we manage it ourselves based on a benchmark. And then you have some longer term investment pools. In the long-term portfolio, the total earned income on that was just over 1.65 million. That portfolio had a return of 1.23 for the quarter and outperformed the benchmark, which was 0.96. So the portfolio did well. And the portfolio had a high credit quality of AA. And then we'll talk about this portfolio a little bit as we move forward when we talk in more detail. Okay. Any questions about the executive summary? I'm going to go into a little bit of a market update as well as the economy. We talk about that. I know that's probably something that is on everyone's mind. Any questions so far? All right, excellent. So we're going to move forward here and talk a little bit the economy. Now, these are these updates here is as of the end of the quarter. That was, over a month ago. A lot of things have changed. One of the things that you, as you may know, is at the end of July, the Fed met again to leave rates unchanged for the month. So, the Fed fund rates is still at 5.25 to 5.5. One of the things that they did signal at the end of the quarter, at the end of the month in July, was that they're looking at possible rate cut here in September. We expect that the Fed is likely to cut 25 basis points in September. I know some of the market participants are expecting possibly a little bit more. There's been some small disruptions in the market over the last 3 days that I know have caused the bond markets to sort of rally. And what I mean by rally is the bond market prices. People have really went into bonds and sort of driven yields down, expecting that the Fed is really going to start cutting aggressively. So what happened in the last couple of weeks? Number one is on Friday, we had a job report that was weaker than expected. So the market kind of got spooked a little bit. Unemployment went up to 4.3% from, I think it was about 4.1 the month before. So the markets kind of took that as a signal that we're headed into a recession. We do not think that's the case. The Fed has all along been saying that they want to keep rates higher for longer because they want to slow down the economy. And one of the things they wanted to slow down to try to keep inflation in check is the job market, right? So they really would like to see that unemployment rate creep up a little bit more. So from our standpoint, the Fed is right on target with what they want to do. The market, we think, has been a bit of a reaction over the last few days. We also saw a little bit of a slowdown in manufacturing, although that was not, a huge hit to the market. It was mostly the job market that caused the last 3 days that you saw in the sort of the stock market. Another thing is, that the Fed pays very close attention to is inflation. Inflation has consistently come down. The last numbers for July show inflation had come down on a year-over-year basis at 3%. So inflation is going the right way. Basically, the things that continue to affect inflation, food away from home, energy had a spike up in June. But, we're seeing at 3%, this is the lowest rate inflation has had since March of 2021, when inflation was 2.6%. So we are headed in the right direction. The Fed still would like to see that rate come down to that 2% level. We think it's going to take a little bit of time for that to happen, primarily because of the housing market. The housing market is still stubbornly high and affecting inflation. But, we see it going in the right direction. I think at this point, the Fed is more concerned about not only just getting inflation down, but also slowing down the job market. So the 4.3% unemployment that we saw on Friday, including the lower job market that came out, is sort of in line with what they were thinking. And actually, if you look at the job market number that was posted, there was 115,000 jobs or so created. They were expecting something like around 185. So the number was considerably lower, but still it's well above 100,000. That is not definition of a recession. You're still creating over 100,000 jobs. So we think the economy is doing well. We're headed in the right direction with inflation. And, the soft landing that, we've always talked about is really, what the Fed is trying to achieve. And we think it's getting there. If you think about soft landing means, slowing down the economy to cool off inflation without crashing the market, without having a recession. So we think it's going that way. It's going to, we're going to see what happens over the next few weeks here and the next few months as we get close to September. We do think the Fed's going to cut 25 basis points. It may be the only cut for the year, or we may see an additional cut possibly after the election in November or December. One of the things that still continues to show the economy strong is if you look at GDP for the second quarter came in at 2.8%. That was higher compared to 1.4 in the first quarter. And that was primarily driven by consumer spending, business investment, and inventory investment. So GDP numbers still strong. The job market at 4.3% is still doing well. So we think that we're moving in the right direction. The Fed has done a good job of getting us where we are, and I think that the quarter point cut is likely here at the September meeting. So, any specific questions anyone has about the economy, the Fed, anything that's going on in the market?
Yeah, just a quick question. I know you commented that you see this last few days as an overreaction. I guess, you don't expect a leg lower from here, or do you expect that it's just more technical driven and not fundamental? So hopefully it goes. So do you expect a sharp correct to the upside or not? I know you can't predict the future.
Actually, we focus. Because of our clients, we focus primarily in the bond market, and we've already seen kind of reversal a little bit this morning in the bond market, right? Okay. So the market tends to overreact one way or another. Last December, when the Fed kind of pivoted from tightening to we're going to start cutting, and they said they were going to cut about 75 basis points this year, the market expected 150. So we see these overreactions in the market all the time. And so, but like we said, I think it's a short-term thing. I think eventually things will sort of level back out. If we're going to go back to where we were, I can't predict that, but we did see the bond market yields come back up a little bit this morning again. So kind of signaling that rates are going to continue to stay higher for a little bit longer.
Okay.
And actually, the higher for longer rates is good for the school district because a lot of your investments are short term. And so, having 5.2 million in a quarter of earned income from your short term investments, and if you include your long term, you're looking at almost 7 million a quarter in earnings. That was unheard of. Even 2 or 3 years ago. So yeah, that's where we are right now. Any other questions? Okay, I'm going to move forward here. I won't touch in detail on this page. This really shows returns of different indices. These are the different bond market indexes that are out in the market. If you look at it, you see red and then green and then red and then green. Really what I want you all to take from this is the bond market has been very volatile. So you have, a couple of months where it's negative, where this is rates going up, and then you have months where it's positive. So really a lot of volatility in the market recently. We have, as the market kind of reacts over and under reacts to different things that are going on. As far as our strategy, our strategy here is quite important. Really, lately, it has really paid to be very patient in this market. Number one is the pools of short-term investments, money markets are paying good yields right now. So it's really has paid to stay really short. Our Florida fixed income pool is today at like 5.49%. And so it really has been paying to stay short, not to take any risk. When you think about yield spreads is really, you look at treasuries and the spread between treasuries and going into a credit like a corporate commercial paper, corporate bond, something, an agency bond. So the difference in those is called the yield spread. The yield spreads between treasuries and investments and other investments has been very, very tight, which means you're not getting really paid to take additional risk. So really, we've been recommending at our clients up to now to really just, stick to treasuries because treasuries have been offered good value. The last couple of days, unfortunately, treasury yields have gone down significantly because what's going on in the market. And so right now, as I mentioned, the money markets and pools are still paying well over 5%. So, to the extent you can stay there, it's really a good place to be in the meantime as the kind of market gets sorted out. So when we have maturities in any of our portfolios at this point, we're just kind of sitting and waiting to see what happens. The key is to be patient, and you don't have to act any particular day if the market is not kind of moving your way. One of the things that we're looking to do with some of our longer term portfolios, just like the one that we currently manage for the school district, is when do we start to extend the duration and so make the maturities longer. You don't want to do that too soon because if the market goes against you, you're going to lose money there. So what we're trying to do is keep the portfolio right now very short. But as we see that the Fed is going to continue to start aggressively cutting, we're going to start to lock in on some of those longer term rates to have those rates for the long term. Okay. Any question? And the other thing is stay high quality. So we're keeping the portfolios at high quality. You see your portfolio is AA. So AA and above is the place to be. And additionally, with any commercial paper, staying high quality. Any questions on the market, the strategies for Deep Blue and the portfolios? Okay. Move forward here. This page is your compliance summary. This looks at your asset allocation, your investments versus your investment policy. If you can see here, column in compliance is this column here. You can see that it's yeses across the board. So as of June 30, your portfolio was in compliance with your investment policy. This is important, obviously, for your auditors to see that you are in compliance across the board. Okay. The next couple pages here is compliance, and this is the compliance at an issuer level. So you have a compliance at the asset allocation level. This is more on the issuer level to make sure that no one investment is taking on most of the risk. So you can see here you have limits of how much you can have in each of these individual investments, and you can see the column here at the end that says in compliance. You are yes in compliance, and from looking at the percentages, we are nowhere near any of the max amounts allowed by policy. Same thing. This is continuation of that page. You can see that the portfolio is in compliance also for an issuer level. Any questions on the compliance pages? Okay. Moving forward, this is just a summary of the two accounts. So besides the investment pools that you have that we work with the finance team to oversee, we also have a couple portfolios that we manage for you. One is our the Polk County Schools long-term portfolio, which is that $52.7 million. And then we also have your short-term account, which right now is just really a money market. If you look at those two accounts, and what the yields are, the longer term portfolio yields about 4.99. Short-term portfolio is at 5.16. So now look at the short-term portfolio. So this portfolio currently is just a money market, a small money market account. This is a place where in the past we were buying securities longer term and laddering some commercial paper and some treasuries. As those things have been moved over into the pools because the pools offer a high yield. So really right now, this portfolio really only has a money market. You can see it's 99.5% money market. It does have a yield of 5.16, and the total amount invested there is about 348,000, and the credit quality of that money market is AAA. So, and the investments in that money market is all under 6 months. Okay, typically here you see the duration is 0.098, so it's very, very short duration. So this portfolio again for the quarter was up 1.3 versus 1.33 for the benchmark, and 5.3 for the 1 year versus the benchmark at 5.47. This is measured against the LGIP 30-day index. Okay. Here just shows you what the holdings are, which is the Federated Government Institutional Money Market Account, and it shows you some of the transactions. Won't go into those; those are here for your information. Do you have any questions so far on anything I've reviewed? Okay. Next, we'll review the long-term portfolio. This is the long-term portfolio is your core portfolio. This is money that you don't touch. It's money that we manage on a discretionary basis, which means that you've given us a mandate, you've given us a benchmark, and you said go ahead and manage it. So our portfolio managers make all the decisions in this portfolio, how it's invested. You can see here at the top, this portfolio value is just under 52.7 million, total market value plus accrued interest. The duration of this portfolio, 1.25 years versus 1.8 for the index. So we're staying short of the index right now by design to try to have an opportunity to reinvest as things come due. Yield 4.99 versus 4.9 of the index. And you can see the credit quality is AA. In this portfolio, we've had an earned income for the quarter of $543,651. Okay. This shows here how the portfolio is diversified currently. U.S. government securities make up about 47%, followed by corporate bonds at just under 19% and municipal bonds at 17%. We have some agency bonds at just around 8.5%. And then some, agency mortgages, and then agency bonds at 4.2, and a small amount of cash. These is probably some residual earnings that hit the account and will get reinvested once once the next month rolled forward. Here shows you how the portfolio is distributed. You have sort of buckets of investments all the way out to 3 years, with quite a bit of it here in the 6 to 12 months. As these bonds start to mature, we'll start to look at investing these out here as we think that we need to extend the duration of the portfolio. Any questions on the long-term portfolio characteristics or summary? Okay. Next page is your performance of the portfolio. Mentioned some of this earlier, but this portfolio is managed against the BOA 1 to 3 year U.S. Corporate and Government Index. For the quarter, portfolio had a return of 1.23% versus the benchmark at 0.96. So it did well for the quarter. More importantly, for the year, the portfolio returned 5.42% versus 4.76 for the index. Also, if you look at the portfolio over 3 year and since inception, which is as of the inception was June 24, 2021, we are well ahead of the returns of the index. So this portfolio is doing very well, doing what it's supposed to, and as we move forward, we'll see how we continue to extend the duration of this portfolio. Is there any questions on the performance? The next couple pages, I won't go into detail. These are here for you all to see just all the different holdings in this portfolio, which includes, as I mentioned earlier, your agency bonds and mortgages, corporates, government bonds. treasuries, municipal bonds, and some money market funds there. And then the last page here, the last couple pages is the transactions over the month. These shows any interest payments, any maturities, any reinvestments that have transpired over the quarter. Okay. All right. That concludes the long-term account. Is there any questions? All right. Well, thank you very much. That concludes the quarterly performance report as of June 30, 2024.
All right, thank you, Dominic. Did a great job of asking for questions. I don't think I need to ask again. I think if anybody had any questions, they had plenty of opportunities. So thank you for that update. We appreciate it.
Thank you, everyone. Have a nice day.
Thanks. All right, so now we are moving on to the next item on the agenda, which is our finance update. So Align, if you want to go ahead and get started on your presentation, you have the floor.
Good morning, everyone. I'll go ahead and share my screen. There we go. So here, we're presenting the most recent financial statements we have, which is for the month ending of May. Important to note, for June, we don't prepare financial statements like we normally would for each month. For the year end, we're working on preparing the full year financial statements for the AFR, the annual financial report that's due to the state early September, which is why we don't put this packet together for the month of June. So I'll start here by pulling up the district's balance sheet again as of May 31st. You can see here in the general fund, we had $79.2 million in assets and an ending fund balance as of May of $108.8 million. When I get to the page of the projected fund balance for June, I'll go a little more into detail with what usually happens in the month of June time-wise. This sheet here, this is the summary showing all of our major fund categories and where we had beginning fund balance, our revenues and expenditures as of May, whether we had a gain or a loss in that fund grouping, and what the ending fund balance again was. Under special revenue funds, you notice they're split between food service and other grants, the bulk of it being our food service monies for the nutrition program that carries forward every year. You'll notice here for other grants, which includes all the title grants, Title I, Title II, other grants that we get from workforce. With the grants, obviously, the district is given an award with a budget. The intent is to spend that all during that year, and any unused funds are returned to the state. I wanted to point out, well, you'll see we'll have a beginning fund balance every year under the other grants. It's usually very minimal, and that's intentional, where we do have some carry over into the new fiscal year, because with most grants, the period, we have a few that don't line up with that, but most grants do line up with the school years, with the fiscal year for the school year, meaning July 1 through June 30th date, meaning expenses need to occur or be encumbered by June 30th. So there's always a small residual carry forward that happens. The state usually gives you through August 20th to have all those residual expenses paid out for the grant, which is why you may always see a residual amount. It doesn't mean the district necessarily is going to keep that fund balance in for those grants. That's going to be spent between July 1 and August of the next year, just to finish out the grant. We have our debt service funds, our capital projects funds, obviously one of the larger funds for paying out and constructing new schools, And I'll touch a little more on that when we get to that fund. We have our internal service funds, which is our health insurance and workers' comp and liability insurance fund. And then the fiduciary trust funds. This is our internal funds that Jennifer was discussing earlier. Those funds that are collected by the schools, by the students, fundraising for use by the students. This is just a summary chart of all the funds together. Again, you can just see, obviously, our general fund being our largest fund, where most of the school district's activities take place. This here is a summary through May, again, for the general fund. You can see the current budget as of May, the actual revenue that was collected, close to $1 billion at the end of May, with a 15% remaining budget. Through June, most of that budget has been collected. We did, the majority of this is our local tax dollars from our ad valorem taxes that get passed through from the county. And so we did receive the remainder in June. We also do see some what we call delinquent taxes or past due taxes from prior year that they do end up ultimately collecting on, and they pass through that, as well as any interest that's earned on those taxes as the tax collector collects it before disbursement. They do share some of that interest that's earned on that. Expenditure wise, you can see our budget for the year through May was at $1.2 billion. We've expensed over $1 billion, and with a budget remaining of close to 20% of that on our expense side. And the remaining fund balance as of May was $108 million, showing a $15 million deficit from our revenues to our expenditures in the general fund. And this is just that the revenues being shown again from the different sources we get for the general fund, obviously state sources and local sources being the majority of it. And by state sources there, I'm referring to our FEFP program that comes from the state through the sales tax that the state collects. Here's a pie chart showing our expenses through May 31st. And I always point out, obviously, our largest slice is towards instruction, being in education. That's where the bulk of the expenses are, salaries and materials and supplies for the students. This chart here shows a comparison looking at the same period the prior year. So this is May of 2023 compared to May of 2024. And you'll see how we do have an increase in revenues of 8% compared to last year, with the majority of that coming from these local sources here, which is the ad valorem tax revenue for the property values, obviously, with property values increasing, as well as new commercial and residential properties coming online and being built in the county. That number has been increasing year to year until the population boom kind of either slows down or levels out, as well as our state sources saw an increase. And that's, again, just the state giving more money in the FEFP. On our expense side, you can see we had an increase, obviously, more revenue coming in from the state on the FEFP side means more students, which means more classrooms, more staff for the students, more expenses for the students. So you see the increase there. This here is, again, our expenses from the general fund, this time instead being shown by what we call functional area. And you can see instruction, and then we have the functional area, and then the different categories, salaries and benefits. Clearly, salaries and benefits, the largest expenditure we have. And And obviously under the instruction side is obviously the highest amount as well, with our teachers being the bulk of our staff. And here you see the expenses by classification again, salaries, benefits, obviously combined being the biggest amount reflected down here, this 691 million. And again, this is through May. And this is just showing again the expenses, the majority of the expenses going on the instructional side. This is the chart here that we created for this fiscal year, where we're just showing again that comparison from the prior year to the actuals, but this time on the category. And in the prior chart that we had before, it was just shown on the functional area, but here we're showing it just as a roll up of those higher categories. And you can see the variance, 3% increase in salaries, benefits, obviously with the costs of health insurance, a 13% increase, contracts, 21%, a lot of that coming just from the increase of more technology contracts coming through, more education is going online and technology based. When you see this, I'm sorry, I should point this out. When you see this decrease here on the capital outlay, this is capital outlay from the general fund side, not from the capital fund. And this sheet here is always one I like to discuss in some more detail. So this is where we project what the ending fund balance is going to be in the general fund. Again, important to note that this is as of May 31st. So you can see we started the year with a projection of a little bit above 5%. That is board policy. The board passed a policy a few years ago where they wanted to see a 5% ending fund balance in the general fund minimum. The state requires a minimum of a 3% for emergencies. Anything under 3%, the state comes in and says you're below their threshold, but obviously you don't want to be right at the state's minimum. So the board adopted this 5% to make sure there was that buffer there, that we're never, riding up against the state's 3% minimum. Important then to explain that we're now showing, as of May, a projected ending of about 7.5%. Now that number has changed because of June. This was at the end of May. Usually in June, we see a lot of expenditures during the month of June that are atypical through the rest of the year. We also see a lot of reclassifications that can occur where expenses are being picked up by a grant. So most grants, as I stated before, they end, the spending period ends on June 30th. So usually around the time frame of February, March, our federal programs department starts to look at what the remaining budget is, and they start to submit budget amendments to the state for what's left through the rest of the year. And so typically by the time there's a back and forth with the state to approve those amendments, the amendment comes through. So usually during June and the year-end period is when we see some of those expenses get reclassified either out of the general fund over to special revenue, or from special revenue back to general fund, depending on what the state determined as far as the allowability towards the grant. So this is as of May, the ending number. I can't tell you what that's going to be yet. Like I said, we're still in our year-end process, where we're doing a lot of year-end closing entries that have to be done. So that number is the best projection that we could do at the time when these financial statements were made or generated. Here on the capital projects fund, you can see our original budget of 196 million. We've expensed through May 176 million, with about roughly 10% remaining. The majority of the revenue for capital projects comes in from our local millage, our local capital improvement millage of 1.5. That's against ad valorem taxes again. What you'll notice when you start to see the financial statements in July for this fiscal year is you'll see an increase there. During May, June timeframe, the district did request some impact fee money from the county. The impact fee money is collected by the county for any new construction, whether it be a brand new construction, commercial or residential, or any additions to existing property. The school district receives impact fees on residential construction, not commercial construction. So any new housing developments that are going in, any new apartment complexes that are going in, those come with an impact fee that the county collects in order, and that funding is restricted to allow the district to increase capacity at the schools, add new student stations, whether that means adding square footage to a school for student stations, an existing school, or to build new schools from all the new development. There's other impact fees that the county collects for roads and public safety, law enforcement, fire, rescue, and things like that. The school district, again, we only collect on the residential side. So the district requested that from the county. The county has been dispersing that monthly. We talked with them, and for reasons of cash flow, we decided to do a disbursement where every month they're sending us a portion of that, and we should have the most recent request collected by the time January rolls around. But again, that money goes into the capital fund, and it's restricted for use of increasing student stations and square footage. This is a comparison to the prior year, May of 23 to May of 24. And you can see we're a little bit, as of May, a small decrease compared to the prior year. That, again, is just a fluctuation of that ad valorem money and when that comes in from the LCI ad valorem revenue. And expenses pretty much in line from the prior year. And this is showing here just to illustrate where the bulk of that capital money comes from, and it is from our local sources. The state gives very minimal money passed through. Some of this capital money that comes through from the state is the charter school capital outlay money that the school still pays out, and that's basically a pass-through. The district collects it and then passes it right along to the 30 or so charter schools that we have. Not all are eligible for it, but the ones that are, and that's close to the majority of them, are eligible for that money. And here you can see the majority of the expenses going out are for facilities construction and then transfers out, which go to cover the maintenance and things like that that are paid out of the general fund, but we transfer that money over to cover those expenses out of the general fund. For our special revenue, again, our grants, but the bulk of this, I'll point out, is when you see this ending fund balance, the bulk of it is the food service money that does roll over every year. A small amount of that 1.9 million that I showed in a previous slide, is for our other grants, and that's just what continues to roll so that we can pay out continue to pay out the expenses on those grants by the end of August. This here is showing our special revenue again by detail, and you can see food service being the bulk of that at 75 million. And then instruction here, 93 million. Again, most of our grants like Title I and, are geared towards the instructional side. We do have through September still some of that ESSER money, which is the COVID funding that came through several years ago, that is set to end and sunset now in September. And that's been part of the reason why the fund balance is a little bit difficult to project sometimes, because with that money, the feds kind of come back and give new allowable uses for it. So through the years, it was restricted for certain purposes. As states and school districts across the country were having a hard time with how to spend that money, they kept opening it up to newer and newer uses. So again, affecting the fund balance projections that we have, because again, they come back and say, well, now you can use this money to fund these kinds of contracts or pay for these kinds of services, and that money then gets reclassified out of the general fund over there. But once the ESSER funds go away, we should go back to seeing a more normal. There hasn't been anything normal in the last 5 years, it seems, but a more more towards the trend of what we saw in prior years. And it's going to be mostly driven by what the state is giving through FEFP and what our local economy is doing as far as property values. That's going to be driving the budget. And this is, again, special revenues. You see here 91 million towards salaries. Again, those are the Title I, Title III, which is ESOL money, the different grants that come in that fund a lot of the some of the positions here across the school district. And it's difficult to compare with a prior year. If you look at the financial statements from prior years, it just depends on what grants get awarded. The ESSER money, of course, there's usually years where we have one-time grants where the most recent one I can think of was the goodness, the name escapes me now, but it was funding that was provided for one-to-one, not for one-to-one, but for school technology after COVID. That was a one-time grant that came in 1 year, 28 million. You had 1 year to use that money. It was the district bought the devices, but again, makes it just difficult to compare to prior years when the revenues that are coming in fluctuate so much. And then here's obviously showing the majority of the grants, federal through state. The Title I, that's federal money, but it is filtered through the state, the Florida Department of Education. Expenses by function. Again, you can see one of the largest slices on the pie is food services. Here's our debt service fund, again, for the various debt that the school district has with some of our certificates of participation and a sales tax bond that was passed by referendum back in 2019. And this is showing our internal service fund, which is our health insurance funds. And you can see the ending fund balance there through May at 28 million. This fund balance has increased from prior years, mostly because of the additional revenue that the board put in to service the health insurance fund. And this is, again, the same chart as before, but just breaking it out by the different I'll call them sub funds that we have within the internal service funds, the workers' comp, general liability, and then the group health insurance. And that's it for the financial statements. If anyone has any questions, I can help answer.
All right, well, seeing as there doesn't appear to be any questions, well, I want to thank you for that presentation, and we appreciate the time and detail you put into that. So thank you. All right, so we will move on now to the next item on the agenda, which is the internal audit update. So myself and Davina will be going over that. I will go ahead and share my screen now, and we'll start on that presentation. All right, you guys see that? Is it working? Working okay? All right, so first thing we want to go over, these are just some of the school audits and investigations that we had during the last quarter. First one was called ESE Coffee on the Ridge. So this is a program that's actually a student enterprise that was run by ESE transition students and supervised by an ESE teacher, Ms. Jancy Tucker. It's located on the campus of Ridge Technical College. So we reviewed a multitude of things, but general ledger documents, receipts, and documentation for 22 instances of money collection. So per Ms. Tucker's own records, her total sales were $2,689, and she had a net profit of $394 for September 2023 to March 2024. So March is when we looked into it, so we were just using the last completed month. So this was for last school year. They started sales in September. So she had herself projected gross sales were going to be $120 per week with an estimated net profit of $75 per week. So for the period that we audited, this would have equated to sales of $2,640 and a net profit of $1,650. But due to multiple issues with her record keeping, we couldn't actually determine total sales with accuracy in this case. But we did have the following findings. So funds collected for the program were not deposited in the district's bank account. So she was holding monies in a safe on the campus of Ridge Tech since the beginning of the 23-24 school year. So since September, when she started making sales, the money was kept in a safe. And then she had kept a handwritten ledger of sales, expenses, and the running balance, basically the fund balance for the program. The next finding that we had was Cash App, which is a mobile payment peer-to-peer money service. It was used for money collections for students and customers. So a total of $1,071 was collected through Cash App for the period that we audited. And Ms. Tucker's personal bank account was linked to the Cash App account where payments were being sent. The next finding that we had was general ledgers that she prepared contained numerous errors. If she would have correctly, accounted for the funds in our SAP and our ERP system, which is SAP, it would not have been necessary for her to create her own ledgers. The next one was that collections revenue was not properly documented on pre-numbered forms and receipts. So the district has official receipts that are standard. We have reported monies collected forms that are standard that are required to be used when money is being collected and brought in, and the revenue that she brought in were not on those forms. The next one, receipts for many purchases for the program were missing altogether, or they were illegible. And the expenses that she made out of the program, they were paid from cash that was in the safe, or they were made from personal funds, like Ms. Tucker's personal credit card or other employees' credit cards, and then they were reimbursed from the cash that was being held in the safe. So they didn't, put in requisitions or purchase orders or use a purchasing card from the district. That process was also circumvented. And then the last finding that we had was the fundraising activity approval form was not completed and submitted until during the audit. So this is a form that most of the time is used at schools because they're the ones that do the bulk of our fundraisers. But whoever is in charge of the fundraiser has to turn in this form before they start the fundraiser. And the main purpose of the form is so that the principal or the director or whoever's in charge of the school or department knows about the fundraiser and signs off, on the fundraiser saying that they're allowing this fundraising activity to take place, on their campus or on their school, whatever it may be. So our recommendations were that Ms. Tucker attend financial trainings annually when they are offered, and also review and use the documentation on IIQ knowledge base, which is where all of our forums are located. It's where help articles are located, a lot of resources on that website. And we also advise that she should shadow Miss Sandra Harper. So Miss Sandra Harper has a very similar coffee shop here at the district office that is also run by ESC transition students. So it's essentially the same program, they're just on different campuses. So we definitely recommended that she should shadow her because Ms. Harper was following the correct procedures when it came to revenue and expenditures. So, and then Dr. Kenneth Hodges, who is her immediate supervisor, should provide increased oversight of the Coffee on the Ridge program until there's an improved accuracy and record keeping. We also created an instruction checklist outlining the proper procedures for deposits and expenditures. And we sent that to Ms. Rebecca Ekman, who's the senior director of ESE, and Dr. Hodges, who is her immediate supervisor. And, just ask them to share it with all of their staff, and especially, Ms. Tucker, and go over it with her so that everybody's on the same page regarding what the proper, procedures are for revenue and expenditures. So that summarizes that one. Was there any questions on this investigation specifically? All right. We'll move on to the next one, which was Mulberry High School. So we had been contacted by the accounting department because they were having an issue with Mulberry High School and their deposits being consistently late. We have a board policy that says money that's collected has to be deposited within a week. And that's one of the major things that Jennifer at CRI will test for during their audit, is making sure that we're not holding money, but it's being deposited within a week of collection. So we reviewed a sample of their deposits from this most recent school year, 23-24, and we found more than a typical number of errors in documenting collections and depositing funds timely. And there was also numerous errors that we found in accounting for their admission tickets. So this would be mostly tickets for athletic events. So we did have the following findings. The first one is that their deposits were not made timely. They held their cash collections and checks anywhere from 8 to 25 days in our sample. As a reminder, 7 days, this policy. In total, there were 64 separate instances of money collection that amounted to $8,334 that were not deposited within 1 week. Number two, there was collections totaling $900, of which $795 was cash that was not turned into the school office the same day. So we also have a policy that says if money is collected outside of the school office, like in the classroom, for example, that it has to be turned into the main office the same day. And the reasons for that are many. The main one is we don't want money sitting in a teacher's drawer overnight, because the main office is where the safe is. It's where the money is held until the armored car service can come pick up the money. So we obviously do not want money stored anywhere overnight except for the main office. And then the next one, collections were not properly documented on forms and receipts. So same as the previous investigation, official receipts, reported monies collected were not being used properly. And then the last finding that we had was for the admission tickets. The school was actually performing a duplication where they were manually entering paper ticket sales into our online platform, which is Hometown Ticketing. That's where we do all of our online sales, and they provide like a point of sale system that we use at the gate for athletic events as well, where we can take credit cards and things like that. So they were manually entering paper ticket sales into the online platform and completing the report of tickets sold form, as well as using the online system. So they also completed a report of tickets sold form for events where there were no paper tickets sold. So the report of tickets sold is only used when actual physical paper tickets are sold. It's not used when the online platform only is used to sell tickets. And then none of the sampled report of tickets sold were signed by the athletic director or other administrator. 11 out of 19 of the report of tickets sold were not dated when it was signed by the ticket seller. And 14 of 19 report tickets sold, the amount of cash collected did not match the number of tickets sold. So the variances range from a $2 shortage to a $45 overage, with a net overage of $76. So we do expect to see small overages and shortages, because whenever you're working with cash, at an event and it's busy, you might make change wrong, give somebody back, the wrong amount of change, whatever it may be. So we expect to see small overages. However, $45 for one event is a pretty big overage for a single event. So we did recommend that the financial secretary and the principal attend financial trainings, and that they also use the documentation that we have on the knowledge base. So that would be policy, procedures, forms, everything that is available to them. And then the principal should also provide oversight of the secretary, especially until there's an improved accuracy in record keeping and a consistent timeliness of deposits, because that's really why we started the investigation, is because their deposits were consistently late. So we wanted to make sure that he's providing that increased oversight until they're able to meet that 7-day policy window for depositing the funds that they receive. So is there any questions on Mulberry High School before we move on? All right. Lake Region High School band boosters. So this was a case that was turned over to the Polk County Sheriff's Office in October 2023. The incoming officers of the Booster Club had questioned some expenditures made by the former treasurer that did not appear to be related to the Booster Club. And it was probably just about a month ago, we received a notice from the AG in the state of Florida that the former treasurer was sentenced to 180 days in jail, and she was also required to pay restitution to the Booster Club in the amount of $9,653. So it was a very serious case, and when it reaches a certain level like this, we do turn over our work to law enforcement so they can take the next appropriate steps. And that's also what we did with an investigation that we turned over to the Sheriff's Office just in January 2024. It is confidential while the investigation is ongoing. We will report on it once it's finalized and once we have more details. You'll see that these things do take time, these investigations. The other one we turned over in October 2023, and we didn't get a result until July 2024. So it does take time, definitely, when we turn things over to law enforcement. So was there any questions on those two items? Ready? I'm going to turn it over to Davina, who is going to talk to you guys about purchasing cart inventory and payroll audits. So Davina?
Hi, good morning, everyone. So we did the annual purchasing cart inventory. The purchasing department performs an annual inventory of all purchasing carts in compliances with PCP's purchasing cart procedures. The purchasing department requires all card holders to complete and submit an inventory form listing all the purchasing cart in their possession during specific time period. The Internal Audit Service Department compare the cards listed on the inventory form with the active purchasing cards in the bank card management system for the purpose of identifying any discrepancies. At the time of the inventory, there were 751 active cards for 175 schools and departments. We had the following findings. One department card was not canceled timely, and 4 school inventory forms included the incorrect last 4 digits of their card numbers. In our report to the purchasing department, we recommended that they reminded card holders to notify the bank and the purchasing department immediately of any status changes with cards. The purchasing department must then ensure that the cards are deactivated in a timely manner to prevent possible fraudulent activities. Further, we recommended that the purchasing department reminded card holders of the importance of accurate and timely submissions of inventory forms. The card holder were required to submit revised inventory forms, correcting the card numbers after the audit. Any questions on that? So then we also did payroll audits. We completed the following payroll audits for the 23-24 fiscal year. We did Oscar J. Pope Elementary, Spook Hill Elementary, Davenport Elementary, Bella Cedar Elementary, Winter Haven High School, Davenport School of the Art, Crystal Lake Middle School, Dr. N.E. Roberts Elementary, Carlton Palmore Elementary, Sleepy Hill Elementary, and Highland City Elementary. 3 schools had more than the typical number and severity of findings. We recommended that the principal provided increased oversight to ensure that the payroll records are accurately accounted for. Those schools were Spooky Hill Elementary, Davenport School of the Art, and Sleepy Hill Elementary. We also congratulated Carlton Palmore Elementary for their excellent record keeping. They had minimal number of findings. And that's it for the payroll audits.
Sorry, I was muted. Thank you, Davina. We kept the payroll audits short and sweet there, so that's good. If there's no questions on payroll audits, we will move on to our last item on the update, which is inventory. All right, so we completed inventory at year end. Every year, the internal audit department works with all of our shops and warehouses to do inventory every year. So we reviewed the inventory processes and results for 2023-24 fiscal year. Now, inventories consist of expendable supplies held for consumption during district operations. So the total value of these inventories as of June 30th, 2024 was $10,253,847. And it consisted of all the items listed there that you see, with maintenance taking the top spot as far as value goes. And part of the things that we do and what we verify is that the team members that are counting the inventory are independent of the inventory process. So the person that's counting, doesn't have access or responsibility for the inventory being counted. So that's an important internal control, because if they're able to adjust something on inventory, but then they're also the ones counting the inventory, that you could see how that could be an issue when it comes to internal controls. So we analyzed the adjustments that were necessary to reconcile the reported count on SAP to the actual items on hand at the time of the inventory counts. And the following inventories were adjusted more than 0.5% after the year-end counts. So anything that exceeds 0.5% in adjustments, we ask management to provide a written explanation, and then we include it as part of our year-end inventory report that we do. So maintenance shops, there are 7 shops total that we have, and there was a total of 34 items that were adjusted at 5 of the 7 shops. It equated to a net decrease of 13,539, or 0.5% of total inventory. And there was one item that had a very large adjustment, which was refrigerant at our Seawalk shop, and there was a total adjustment of 13,050, and it was 7.13% of that shop's inventory. So it was a big adjustment just at that one shop that made up a large portion of the total adjustment for all the shops. And management did say that they believe they had 30 units of refrigerant that were not delivered, and they didn't discover it until during inventory because of receiving errors in the system. So steps they have taken, they have limited receiving of refrigerant to 2 employees, and they're also implementing a process where inventory has to be verified prior to the receipt or issue of refrigerant, and they're also going to do monthly counts of this specific product. So the next department is the Electronic Equipment Repair Service, our EERS department. They had a total of 132 items that were adjusted, and that equated to a net decrease of 18,644, or 0.93% of their total inventory. So in management's response, they said that they were short-staffed, which has since been rectified, and they had a lot of inventory movements that increased substantially, over prior years due to 100,000 students being issued devices. So you guys, may be aware that we had a one-to-one program that was implemented where students, all received their own personal devices. The EERS department was, very much obviously involved in that process. So there's a lot going on with inventory in the EERS department because of the devices, that we handed out to students in our schools. And they also had some software issues that they said have since been resolved as well. So. And then the last one is the school supply warehouse. They had a total of 497 items that were adjusted, and that equated to a net decrease of 6,361, or 0.61% of their total inventory. Management said that their adjustments made during the year due to something they called short picks will be handled differently so as not to skew the records. From our understanding, short picks is a term that they use in the school supply warehouse to identify when a school orders something and they don't have enough on hand, physically on hand in the warehouse because of differences, in what SAP says versus what's physically on hand. So there's, they're going to handle that process differently as far as how they report on and adjust those things so it doesn't affect their records at year end. And they did have the following, well, this was for our food supply warehouse, but they had the following inventory write-offs during the year that totaled 100,807. There was 2,400 cases of dried cranberries that equaled 82,561. There was 875 cases of peanut butter cups that totaled 14,895. And there was 1,431 cases of raisins totaling 3,352. These things are written off for various reasons. Sometimes it's a bad product that's delivered. Sometimes the expiration date they're delivered with an expiration date that's only a couple months out. So it's not necessarily negligence on the part of our food service warehouse. It could be, but it's also things from the manufacturer, and the provider of these items that cause us to have to write these off. So, all right, that is the last part of our internal audit update. Was there any questions about anything that we covered in this update? All right, well, if there's no questions, we always have to leave room here for public comments. I don't necessarily see anybody on from the public, but we will give a second in case there's any public comments from anybody attending the meeting. All right, so the next item that we have is just to set our next meeting date. We always try to go with the first Tuesday of the month, so that would be Tuesday, November 5th at 9 a.m. That is election day, so I don't know if anybody has an issue with that day. If you do, you can email me or Carol, or you can let us know, but we'll go ahead and tentatively set that date for November 5th at 9 a.m. So, all right, if that's all and there's no questions or comments, then we will go ahead and adjourn this meeting. So thank you all for attending, and we will see you next time. Thank you.